Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 5th of December 2016 and we're producing this video particularly for those who are relatively new to gold and silver investing or stacking. We are addressing what is meant by the gold to silver ratio, how it has performed and why it can be important. Basically, the gold to silver ratio is the amount of silver it takes to purchase 1 ounce of gold. At present, the gold to silver ratio stands at 70 to 1. This means, at the current price, it would take 70 ounces of silver to buy 1 ounce of gold. Investors who trade gold bullion, silver bullion and other precious metals examine the gold to silver ratio as a signal for the right time to buy or sell or exchange one for the other. When the ratio is high, the general consensus is that silver is favoured. This is because, relative to the ratio, silver is somewhat cheap. Conversely, a low ratio tends to favour gold and may prove to be a signal that it's a good time to buy it. Many large-scale experienced investors may trade their silver for gold as the ratio drops and vice versa. This enables them to diversify their precious metal holdings and take advantage of favourable trends and prices. Whilst this sounds easy to do, we caution novice or small-scale investors to beware, as the ratio can and has fluctuated quite widely. For example, accurate records date back to 1687, and since then the ratio has vacillated between roughly 14 and 100. Should you get it wrong, you may find yourself holding on to one particular metal for far longer than you ever anticipated. Indeed, prior to 1900, the gold to silver ratio hovered around 16. This was likely because many countries were using gold and silver backed currencies. For instance, France and the United States, among others, assigned statutory limits on what the ratio could be. In addition, the US Geological Survey has estimated that there is just over 17 times more silver in the Earth's crust than gold, which could provide another explanation for the pre-1900 gold to silver ratio average. However, throughout the 20th century, the ratio has averaged between 47 to 50, with considerable highs and lows in between. We have noticed more recently that at 80 to 1, silver is generally regarded as cheap compared to gold, and at 50 to 1, gold appears to offer better value. So here is a hypothetical for you. Assume you have a choice to either purchase 1 ounce of gold at $1,100 or silver at $20 an ounce. You check the GSR and notice it is 55 to 1. Quite low compared to recent trends. So silver is deemed a little expensive, but you prefer silver, so what do? Well, you purchase the 1 ounce of gold and hope the GSR widens. Lo and behold, 4 months later, gold has risen to $1,500 and silver has risen to just $21. The GSR now stands at 71. So you sell your gold and purchase the silver, or exchange them if you can. You are now in receipt of 71 ounces of silver, as opposed to the 55 ounces you would have received had you purchased the silver originally. Now this is a simplistic example and doesn't fully take into account the costs of buying and selling or premiums. But this is the principle which many large investors consider. And when the GSR falls again, they then exchange that silver back into gold. Whilst the GSR offers a guide, there are many other factors which could determine whether you should swap one for the other. For example, taxation issues, such as capital gains tax or value-added taxes, ease of convertibility, and premiums charged or obtained. As you can see from our chart, assuming gold is trading at $1,250 an ounce, with a ratio around 50 to 1, the average for the 20th century, then silver would trade at $25. So when you hear pumpers telling you that silver will rise to $50 any day soon, then bear in mind that the ratio would have to fall from the current 70 to 1 to 50 to 1, and the gold price rise to $2,500, more than double its current price. Is it possible? Yes, indeed. However, the highest price gold has ever been in US dollar terms has been approximately $1,900. So a number of challenges have to be met before that elusive $50 silver is reached. We hope this explanation is helpful, and should you have any questions, then by all means place them beneath this video. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.